Securities offered through Kestra Investment Services, LLC, Kestra IS, member FINRA SIPC. Investment advisory services offered through Kestra Advisory Services, LLC, Kestra AS, an affiliate of Kestra IS. Capital Advisory Group, Inc. is not affiliated with Kestra IS or Kestra AS. Neither Kestra IS nor Kestra AS provide legal or tax advice and are not certified public accounting firms.
You work hard for your money. For the next hour, you're going to learn how to keep what's yours. Capital Advisory Group presents Keep What's Yours. Here is Josh Gilbert and Jeff Zufall.
Hello and welcome to Keep What's Yours with Jeff Zufall. I'm Josh Gilbert, sitting here with Jeff Zufall, Senior Tax Strategist and Wealth Advisor with Capital Advisory Group, and we have gotten through tax season.
Yes, we made it.
We made it. Boy, and you came in today, and you could just see it on your face.
Oh, yeah.
Just relax. You sat down, and you were just kind of shooting the breeze. You're like, this is nice having time
I can sit and take up space. I'm good at it.
Yeah. But for the last, 4, 5, 6 weeks? It's been
probably 8 weeks.
8 weeks.
8 weeks. Been a little aggressive from a time constraint.
Completely different story.
Yes.
So we're glad to have you back.
Thank you.
Jeff.
I'm glad to be back.
And frankly, you were telling me off the air that last week you got up and you were like, what's going on with my hips?
Oh.
And, Jeff developed bed sores from sitting at his desk.
I've never sat in a chair at a desk so long in my life. So,
and that's interesting to know that, when we bring our taxes to you, Jeff Zufall's got his hands on a lot of them.
Yes, the bulk of them. I mean, there's very few that don't either someone else may key them if they're easier. Mm-hmm. They may key them, but it still passes my desk. I still give my blessing on it as it goes out because it's got my name on it.
And I don't know if this is an official endorsement or if I'm just speaking off the cuff here, but I had mentioned during the Heidi show that Jeff did our taxes, and I just texted my wife. I said, you know what, check the account and see if it's hit yet, because last year when you did our taxes,
it's a little slower this year just because it was later in the season.
Oh, okay.
If it was earlier in the season, it'd be probably a week. We might run 10 to 14 days now.
Okay, because you filed for us last year, and sure enough, 3 days later, it hit our account, direct deposit.
It was earlier in the season last year versus this year was, I'll say, a little later. Mm-hmm. So it was kind of in the hustle bustle of it. So,
well, we will wait for our money. But I was talking to Heidi, and throughout the past couple of months, she's like, I got to get out to see Jeff. We've got this tax preparation people. They've been doing it for years. We've always paid. And our tax bill to pay the people to do the taxes, she was quoting outrageous numbers, like $1,000. Yeah. And so she said, we got to go see Jeff. I wasn't even pushing. Yeah. I didn't even push it. It's like, we're at a mixed company and people say taxes. I say, Jeff Zufall. But, I'm not going to push Heidi on it. If she hears me talk about you, she hears you all over the station. And she finally came to the decision herself. Yeah. We got to go see Jeff Zufall. She came in one day last week, and she's like, I could kiss him, And it's and that's a big stretch for Heidi. But she said it cost us less, like a third less, 2/3 less, actually. And Jeff got us money back. Yeah. It's the first time in years where they didn't owe.
That's good.
And they got money back.
That's right.
So the question is, what are you doing, Merlin the magician, that these other companies aren't?
The difference is basically what we'll do is sit down with those returns. Like I said, sometimes I don't key it. Someone else will key it, the basic information into it. Then when I get my hands on it, then I'm looking for the angles. Where could you save $1? What do you got going? And without giving, like in your case, just different stuff, HSAs, you don't have them funded completely to make that difference up. There's a ton of stuff out there, that we can work on. In Heidi's case, she's got little stuff that, you could play with, if you want to call it that, without giving out too much information. And that's what you're looking for versus most people. And I say most, there's very good CPAs out there and accountants that just show up, hand them the stuff.
It is what it is.
Whatever it is,
boom,
whatever
boom,
you
boom.
give them, that's what gets keyed. It's done. Thank you very much. Have a nice day.
Right.
There's really no thought pattern in hey, look at this, or here's what you need to do for 2023 going forward, because that's our next event, is reach out to them and say, hey, you did this last year. This is where you saved money. Here's how you save more.
I want to talk about that in just a second, the follow-up meeting, because that's where we really find out, hey, Jeff caught a couple things, but this is how we set him up ahead of time.
Exactly.
To keep the most money. But, I had an uncle that this time of year, that's what he did is, he signed up to freelance, or I don't even know what you call it, seasonal help, because the big tax companies, the one that lobbies the government to keep us from having that postcard tax return, the big tax companies, I'm not going to mention their names, but you know them. They're on the street dressed up as the Statue of Liberty, twisting the sign, come in and get your taxes done. They hire seasonal help because in August and September, nobody needs them.
Ghost town.
It's a ghost town.
But if you get a notice, who do you call? I mean, that's if there's an issue down the road, summer, fall. It typically takes. I mean, some of them are immediate. They fire off letters, but typically some of them might take 6-8 months before you get a letter.
Yeah,
and they're looking back at something,
So they're open year round, but this is the busy season, and they hire a lot of help. And my uncle was doing it, and like you said, he just kind of gets the returns. Punches in the numbers and spits it out, and it is what it is. And, you want to say Jeff Zufall lives and breathes this stuff year-round.
Yeah.
And who would know better, the seasonal help or the guy that spends his entire year meeting with us 4 times a year, going over our stuff, making sure that in August, that in October, we're still on the straight and narrow, doing as many things with our paychecks. I call it paycheck gymnastics. How do I stretch this paycheck without breaking it?
Yeah.
What more do I want to put in my 401k? What can I put in an FSA for my son's school? These are the things that Jeff tells us about. And I would imagine if you just came in off the street and showed up at one of these places on Olive or something, that they're not even going to tell you about that stuff.
They wouldn't get that deep into it. They just say, hey, here's your returns, done, boom, or you get a refund, great, have a nice day.
See you later.
Yeah.
You are truly a number on a piece of paper.
Yes.
I always say the IRS looks at us by our Social Security numbers.
They do.
489, Oh, he's back again. But Jeff looks at us as people, which is what we are, looks at our families. We have sit-downs, and I'm really looking forward to doing the follow-up. You're doing, we're going to talk about the Shred Day, and that's coming up next weekend. And you're going to do your vacation, which you sorely need. Well overdue. Well overdue. And then when you get back, it's, we'll get a calendar date put on and just say, Jeff, hey, this is what happened. This is our tax return this year.
Here's what we need to do.
Here's what we need to do. This is where I am, and this is what I've got my money in right now. Should I move it? Should I keep it there? Should I get more aggressive? Should I get less aggressive? And these are the things that truly
what puts money in your pocket at the end of the day. That's the key to it.
So rather than get a paycheck next Friday and see all this money going out to the federal government, there's ways for us to keep it in our pockets.
Yes, plenty. Plenty. And in some cases, depending upon the complexities of your return, there's, if it's a super complex return, there's a ton of stuff to do. If it isn't that complex, yes, there's still stuff you can do, but it's little stuff. But everybody needs to worry about it or apply it, even if it's 1-2% on an ongoing basis. That's what you want to do. At least get started.
And Heidi's figuring that out, that there are different people out there who can actually look at your taxes and get you set up for the rest of the year. And I'm sure her and her wife will schedule a follow-up with you. Let me ask you this, without getting too grossly into Heidi's situation. A motorhome. These things are getting bigger and bigger, and, it's not necessarily a second home. But in reality, it kind of is a second home on wheels.
Yes, and it is. And so the theory on it gets a little complex, but with SALT, which is state and local taxes. So your itemized deductions, if you want to call it, you're capped at $10,000 for mortgage interest and so on and so forth. So the motorhome, the boat, as long as it has a kitchen and a bathroom in it, it constitutes a second home.
Really?
So it could be an RV, could be a boat. That is a second home. So the interest that you pay, you could write off. But again, the technicality is you're capped at $10,000 in that category, if you want to call it that.
My regular house is
so
probably
your regular
gonna...
house and your regular state tax will probably blow that out of the water. So really, you kind of lost its luster. 2019 when it went into effect. Yeah. So if they ever adjust SALT, which it's come up 5 times, I think, and they just have never acted on it, where they bring it back to pre-2018 rules, that could be a whole nother ballgame to open up for RVs, boats, second homes, so on and so forth, because then you really do get a true deduction for it. So we're waiting to see how that flies.
So in the eyes of the government, as it stands now, you can't really capitalize tax-wise on it. But in the eyes of the government, if it has a kitchen
and a bathroom,
it
constitutes a second home.
Second home.
So it could be a trailer, it could be RV, could be boat. I mean, there's boats big enough.
Doesn't matter if it's on wheels or on water.
Doesn't matter.
Yeah. What about a plane?
No, because it doesn't have a bathroom in it.
Oh, okay.
So...
All right. Well, some of them.
Well,
does it have to have a shower?
It'd have to have a kitchen and a bathroom to where you could physically live in it. So a plane would be a little tricky to live in. You'd probably be stretching that.
Well, what's your address?
Guardrail.
Hangar 12.
Yeah. No, I have a cousin that lives on an airport in Illinois.
Oh.
I mean, literally flies his plane, puts it in his garage like we put a car in there, walks in his house.
Wow.
Pretty cool.
It's going to be really loud.
It'd be a loud place to live, but I think the houses are far enough off the actual airport itself. But
I was talking to McGraw, and he was going on and on about JFK Airport, the TWA. Remember that terminal there?
Oh, yeah.
It was designed by Eero Saarinen, the
same guy that did Lambert.
Did the arch and all that stuff, and they've converted it into a really kitschy, fun hotel. You know, it's still got all that mid-century design, but then where all the planes would park, they've got hotel rooms there now.
Huh.
And it's actually, they got a pool on the roof, and you can watch the planes come in. It's actually a very expensive hotel to stay in, but it's at an airport.
Yeah.
Like not across the street.
It's at it.
From the airport. It's at the airport. And that's got to be loud.
It's got to be better than LaGuardia, though.
Well,
every time I've been to LaGuardia 3 times, and 2 of the 3 times I was trapped there.
They
literally
fixed
trapped
it.
there.
They fixed it. They just opened up the new terminal. It was pretty nice.
Still, I have horror stories I could tell you about that.
God.
Like 10 hours standing around trying to figure out how to get home.
It was like, remember Night Court?
Mm-hmm.
It was like being in the commissary at Night Court in the 80s. And this was 2017.
Yes. Oh, no, believe me. We walked in. The cab driver dropped us off. He kind of snickered a little bit as we got out of the cab. And
good luck.
You're going to have fun. Got our stuff, walked in the door, and there was 50 million people standing there. And the only way they could get planes out is somebody was standing on a table screaming out flight numbers.
Oh, my God.
That was the only way. No security, just they'd march. They'd round up enough people to make a plane go. They'd march them down the jetway, take you right to your door, and just throw you on a plane, get you out of there.
Yeah, and it was under construction for years.
Oh, yeah, but their computer system was terrible.
Terrible.
So.
Well, like I said, they fixed it, at least part of it.
Oh, so, I might not be there for a while, but...
Yeah. I'll take next time I fly into LaGuardia, which is not often, but I'll send you a picture.
Okay.
You go, okay, all right.
Maybe I'll go back.
Send me a picture of the computer system. All right, we're going to talk about Shred Day for the Capital Advisory Group out there on the parking lot. It is April 29th, next Saturday.
Yes.
And the idea is bring the stuff that you no longer need anymore, but you don't want to throw away in your regular trash, and we will shred it for you. And the topic of the day today, what do we need to keep, and what should we shred on Shred Day next Saturday? So Capital Advisory Group, next Saturday, Shred Day. We'll talk about it in the next break. But Jeff Zufall is your senior tax strategist and wealth advisor with Capital Advisory Group. Here's the number, 636-394-5524. Don't take my word for it. Listen to Heidi. Just ask her. She finally got money back for the first time in years.
That's right.
And she paid a third of the price of what she was paying someone else in Clayton to do it.
I have to sell my Maserati now. So
yeah, Jeff is sacrificing his supercars to make this affordable to the rest of us. So give him a call, 636-394-5524. If you got an extension, he can help you out with that.
Oh, yeah.
Or just get you prepared for 2024 tax season.
Yes.
Because we still have, 8 months left?
Got 8 months.
Of 2023?
8 whole months.
Thousands of things we could be doing,
Yes. A bunch.
to prepare us for next year to keep more of what's ours. Did you get your taxes back and realize, man, I owed a lot? Or, man, I should be getting – Heidi's getting money back. Josh is getting money back. What am I doing wrong? Call Jeff, and he can set you up on the straight and narrow for the rest of the year, another 8 months of savings.
Yes.
And then when you maybe get your tax return next year, wow. Hey, we could go to Disney.
That's right.
Well, we are going to Disney.
For a half a day. No.
We definitely didn't get enough back.
Yeah, to go to
pay
Disney.
for the whole trip. So there's other things going on there too. But we'll be back. What should you keep and what should you shred? Now that tax season is over, Jeff is in a much better mood.
Oh, yeah.
He's much more available. What did your trainer say? My hips, I'm getting, well, you got to come in.
That's right. I had to.
You can't spare an hour?
No, he's like, just spare an hour. Come in and work out. And I'm like, I don't have an hour.
I don't have an hour.
That's a tax return.
Yeah, and that's because he's touching just about everyone that comes in the door just to see if he could save or keep a little bit more money for us. That's Jeff Zufall, 636-394-5524, CapitalAdvisoryGrp.com. We'll be back. What should you keep and what should you shred?
Keep What's Yours continues with Josh Gilbert and Jeff Zufall.
I'm Josh Gilbert, sitting here with Jeff Zufall, Senior Tax Strategist and Wealth Advisor with Capital Advisory Group. Taxes are done. Extensions have been put in.
There's a few extensions that we're working on. We get back on those next week, actually like Monday.
Yeah.
We'll start working on those diligently, get those knocked out. Some we're still waiting for data. K1s are the killer.
What are K1s?
So
again?
K1's like a partnership, private partnerships. They still have to report out through what's called a K1. So sometimes these are, off the beaten path investments, true partnerships. And sometimes it's a lot of data that needs to be wrapped up. The tax returns need to be done. They need to figure out who's rightful owners, who's entitled to, what distributions, and then get them all put together. So that we have, I know there's at least 24 that are sitting there that are waiting on K1 still.
Yeah.
So,
but everybody paid.
Yeah.
Everybody paid estimated taxes.
Yeah. Got estimated payments made. Even if we're guessing, I say guessing. We're like, we don't know where you're at. Just pay X, and so as long as you pay in your previous year's tax liability, you're safe. And I say safe where they will not hit you for underpayment penalties, and you go from there.
Well, that's the worst thing. If people bury their head in the sand. Oh, I don't want to pay. I got a tax bill for $1,000. I don't want to pay it. I don't know how I'm going to pay it. You can set up payment plans.
Just an installment agreement. Super simple. Agreements. Even if it's the state of Missouri. Illinois is a little bit more aggressive, but they will work with you. Missouri, call them. Call Missouri Department of Revenue. Just say, hey, I can't pay. What can I do? As long as you pay them something, they will, I say, back off. You're still going to owe interest and penalties rolling forward, but you won't get nasty letters from them.
Yeah.
And again, here's a little trick that a lot of people don't understand. So typically most people that owe tax continuously owe tax because they're trying to pay the previous tax. They incur a new tax. So if you have an installment agreement with the IRS that was pre-2022, and then you end up owing tax FAR 22, you have to renegotiate your installment agreement with the IRS. You can't just go, hey, add it to it. You physically have to fill out a new form, send it in, make sure that they agree to it, but don't blow that off, because what they'll say is if you incur new tax and it's not paid, that your old installment agreement is now null and void and you owe us all that money.
Yeah,
so,
and my blood just started to boil when you said that. People's are paying off not necessarily their taxes from last year, but the penalties and the fees that came
all the
with
stuff that comes along with it. So that's why I say if you're it's a double-edged sword, honestly, because you can't pay double and triple, as you go forward. You only got X dollars to pay. So the old tax is basically the better way to go.
Yeah.
But again, say that you roll forward, you incur a couple more $1,000 in tax due this year, you have to renegotiate your installment agreement.
And I hate that. And it seems like a vicious cycle, like with those check cashing places.
Yeah, it's wicked.
But here's the thing, I don't want to be self-responsibility guy here.
Yeah.
But you should have paid them.
Yeah.
You should have paid. You can't just ignore it and hope it goes away. It's just going to get worse.
Yeah. And we've sat down and helped people. I mean, there's an installment agreement, which is your basic, you're going to pay interest and penalties on the dollars going forward. Super simple, though. IRS agrees to it. They'll force you to do like pick the 15th of the month. We're going to take $100 out, so on and so forth. Then if it's really bad, offer and compromise, that you drag an attorney in, kind of go negotiate with the IRS. And sometimes those work. It's not like the late night commercials where you see, Joe, he settled with the IRS for $12 and he owed him $14 million.
Yeah, that
doesn't work that way. Those are long shots. I mean, the worst possible things that could ever take place, probably took place for that to happen. But they typically will be 10 cents on the dollar, 20 cents on the dollar, something of that effect. But you have to sell it to them.
Yeah, I forget who I was talking to in my private life, but they were saying that they had 1 year a job where they were working at, maybe it was freelance or they were contracted.
Yeah, we see that a lot where people get put on 1099 and they don't realize.
And they don't know it.
Yeah.
And they're getting a paycheck, and I guess they assumed that the taxes were being taken out. Look at every paycheck stub you get. It's once every 2 weeks, or I don't know how often people get paid these days, but it'll take you 15 seconds and just glance down and say, are they taking taxes out?
It'll say Fed, FEDW/H, withheld. And if it's zero, be worried.
You got a problem. And he went back to his employer and said, you didn't tell me that this is da-da-da-da-da. But at the end of the day, the IRS doesn't care.
They don't care. If you owe, you owe. And that's a dispute that gets often. Should you have been a subcontractor 1099? Should you have been an employee? Could you have been what they call a statutory employee, which means you're kind of a hybrid in between, where you get a W-2, taxes are withheld, but you can also act like you run a business at the same time. That's called a statutory employee. So it's kind of weird, but most people get a 1099, don't pay attention.
Yeah.
And it's easier for the employer because the employer never has to do payroll taxes. They don't have to do any filing. Basically, end of the year, they say, hey, I paid you $10,000. Here's a 1099. Have a nice day.
Yeah.
But then the employee's like, hey, wait.
Yes.
I owe tax on this.
Here's the question. Would you rather pay a little bit of taxes every 2 weeks, or at the end of the year have a giant tax bill waiting for you? Chances are you didn't squirrel that away into a side account.
Typically, no.
Future taxes. You're gonna owe $3,000.
Oh yeah. Well, and the problem is if you're 1099, self-employment tax kicks in, and here's where the employers are like, hey, you can be a subcontractor. Like we talked about, you pay 6.2% of your check to Social Security.
If you're self-employed,
1.45 Medicare, and KTRS matches that dollar for dollar.
Mm-hmm.
If you're self-employed, you're paying the full.
You're paying both sides of that.
So not only do you owe federal tax, state tax, and then this self-employment tax shows up, and you're like, wait, how's that possible? That's your Medicare and Social Security coming.
And it's got to be fun and free to think, oh, I'm freelance, or I'm contract work, or I'm run my own business and this and that. Well, your taxes just got a lot more complicated.
They got way more complicated and a lot more expensive.
Yeah.
I mean, unless you have tons of expenses to offset it, that's different. But still, if you have $100 of profit, you're paying federal state tax, and you're paying your 15.3, which is your Social Security and your Medicare for down the road.
Yeah.
So.
But moral of the story is, if you needed an extension and you filed for one and got one, you better have paid something.
Something. So if you have W-2, and you throughout the year you've paid into the system, but you still owe, that's a calculation you try to work out at the end of the year. But typically you'd be okay because you paid in on every 2 weeks or every month, however your employer submitted it. You're okay because you paid in throughout the year. But the main people would be subcontractors, self-employed people that really should have been paying estimated taxes but didn't.
Yeah. So do not bury your head in the sand. And if you were one of these people that said, I owed money, I just kind of pretended like tax day didn't
exist.
happen on Tuesday, call Jeff immediately.
Yes.
And
we'll
say, hey, here's the reality of it. Jeff doesn't judge anybody.
No.
Not
at all.
This is a safe space.
Yes.
You call him and say, hey, I kind of ignored my tax bill, but I want to nip it in the bud. I want to set up a payment plan. I want to make sure that my taxes and fees and penalties end now and that we get set up and pay this off.
We've done, I think the most we've done was 7 years worth of tax returns for somebody who didn't file for 7 years.
Oh, my gosh. What were the penalties and fees?
Long story, but there wasn't any because of a situation, but just didn't file. We went back and filed all 7 years, all at the same time. There was a huge, huge bill that was due. He paid it. It was kind of wild, but 7 years of not filing, and it was just that kind of like, hey, I didn't file that year. I'll get it next year. And then next year turned into 7 years. So
when someone brings this to you and he says, hey, I didn't file last year. Okay. But what about the last 7 years? Well, I didn't file them either.
Yeah. And they have
why not?
And they have to be your tax return has to be in succession. And I say if you have to file, if you don't have like an older couple, Social Security, a little bit of pension, maybe don't technically have to file. You could not file for a couple of years and then file if you have a windfall 1 year. That's acceptable. But most, I'll say, normal people, and normal is probably the wrong word, but just average person.
Regular people.
If you didn't file your 2021 tax return, you can't go file your 2022 tax return.
It'll go,
because they're like, hey, what happened there?
Yeah.
Now, if you could say, hey, here's an informational return. I didn't make any money. I was a student. You file an informational return 21, file a regular return 22, you're fine. But you just can't arbitrarily go, hey, I didn't pay those couple of years. I'm going to file today.
I'm going to skip a couple of years, but then jump back in.
Yeah.
Yeah,
because otherwise the IRS is then going to come back and go, well, what happened those couple of years? Why aren't you filing? And you get in this massive letter writing campaign trying to figure that out and getting them to understand what took place.
Not filing 1 year, okay. Maybe I could believe that was a mistake. Maybe out of the country. I don't know, Jeff. Not filing for 7 years. Something's going on.
Just they were taking it, throwing it aside, not worrying about it. But
something happened.
But it's fixed.
Yeah, it's fixed now.
It was a good summer project.
Sure. Yeah, I bet. But Jeff can help you out with that. Obviously, most people out there aren't 7 years in arrears. Yeah. But if you need help and you ignored it and you just hoped it was going to go away, it's not.
It won't.
Call Jeff, 636-394-5524. Address it up front. No judging. Get it taken care of, because the last thing we want is to hear more horror stories about the government taking more of what's yours.
Exactly.
The name of the show is Keep What's Yours.
Yes.
Not give more of it away to the government. Gosh.
Write another book, How to Give It Away. No.
And if you hate paying taxes, number one, you should call Jeff, and he can help you save more of your money, keep it in your own pocket. But if you're one of these, taxation is theft people, that's great. You still have to pay taxes. Yes. Go ahead and lobby the government to get rid of
Speaking
income
of
tax.
that, there was a senator, I caught a blip of it the other day, who was talking about he wants to do away with payroll tax, and he wants to do away with sales tax, real estate tax, all these crazy taxes that we pay. Abolish the IRS, and everybody pays a national. I think he said it was like a flat tax of 15%. So it's come up again. They'll probably die on the vine, but it's just funny that like probably twice a year they come up with this, hey, let's abolish everything and go to a 10%. I think 10% was always the rolling average, 10% flat tax. You make $100,000, you pay $10,000 in tax, have a nice day. This guy, I think he was at 15%, but he was abolishing everything: sales tax, payroll tax. So your 6.2 and your 1.45 that you pay for, that's payroll tax, would go away, and you pay this flat, maybe a 15 or 17% tax. I can't remember his name, but.
Well, two things on that. Number one, his billionaire donor would be saving a lot of money.
Gazillions of dollars.
They
don't have to do the matching.
Currently paying 40%.
Yes.
And probably not. He's probably got a loophole that he found.
If you're in that 1%, there's 100 loopholes. You're not paying anywhere near what you think they're paying.
Right, but it would save them, the top earners, and we'll get in. You had mentioned the top earners and how much they pay. We'll get into that in a second. But it would save the millionaires and billionaires cajillions of dollars.
Payroll tax,
but
for the corporate side.
Let me ask you this: they know what we make every year. They know we file our taxes.
Yes,
the IRS knows what's coming in.
The system is on your honor.
I'm all for it because I'll save some money, but crunch the numbers and tell me if it's even, because this guy's probably going to come back, senator, right?
Yeah,
going to come back and ask for a raise next year for cost of living.
Exactly.
And you just got rid of all the taxes. Who do you think pays your salary?
Exactly.
Do the math. Does it add up? And if so, maybe I'd be for it.
Yeah. But I don't think that they could do an honest appraisal of the situation and go, hey, look, because every time they do, they're, $40 billion, trillion off on their estimates. So,
and the last thing you want to come down to is next year's taxes. We're in a $40 billion deficit.
There you go. Oops, sorry. Everybody's go back to that tax.
We didn't carry the one, So, okay. Well, do the math. I mean, everybody knows what we make. It's all in the computer.
It's in the computer because your W-2 that it's issued, your 1099s that's issued to you, are also at the same time forwarded off to the IRS. Mm-hmm. So literally that's how they catch if underreporting of income. If somebody reports a W-2 or a 1099 that you didn't, there's usually, it used to be, and again, hopefully we go back to whatever you could call normal, 12 to 14 months down the road, there was a letter that's generated and it says, hey, you reported this. We reported, the IRS or someone else reported this. And it's the IRS telling you there's unreported income floating around out there somewhere. And it happens if you miss a 1099, $2,000 or $3,000 1099 happens. That's an easy fix. But when you say, hey, you missed $25,000, that becomes a huge issue. So,
yeah. So, I'm on board with anything is if you could show me hard numbers, and then, we can make a decision. But again, getting the tax code to change
is nightmarish. There's too many lobbyists in it, way too many, pushing different things that they want done. Now we pay for they call it a EFIN number, which is like our electronic address, that we put on returns. And I think we pay $40 a year for that, $39.95 or something like that. Now somebody's come along and said that the IRS cannot charge preparers that fee. And it's like, what? So now they're saying we might get a refund back of like 2 or 3 years worth of our.
Because the tax preparer lobby is hey, stop nickel and diming us.
Yeah, it's just a like a electronic address.
And you're a tax preparer, and you say, I don't care. I don't mind.
I'll pay them $40. So
cost of doing business.
Exactly. So you get a number.
Writing it off anyway.
Yeah, but so that was an email that popped out. Right there, as the heat of tax season kicked in, saying that, and they were going to do I'll call it a competency test for tax preparers, minimum basic. You had to pass a minimum test to do it. IRS imposed it. They started putting everything in play, and some of these lobbyists were able to come along and knock it out and say, no, we don't want that.
Yeah,
because
they want to know if you could add 1 + 1
exactly.
equals 2.
Half their people couldn't probably pass the exam,
lobbyists are
and
like,
it was
no.
a bare bones. It was a pretty easy test.
Yeah. Man, woman, camera, person. Yeah. But abolish sales tax. How about we abolish lobbyists?
Well,
let's do that. Let's do that instead.
There's way too much money in.
All right, so we're supposed to talk about shredding, but we got to go to another commercial break. But when we come back, what to keep, what to shred, and how far back can the IRS go if they find out that something fishy's been going on. We'll talk about that on the other side. It's Keep What's Yours with Jeff Zufall. Tax season is over.
Yay!
But
background noise.
Jeff's vacation still isn't for another 3 weeks.
Yeah,
or
no,
so.
I was like, man.
He's around if you need to talk to him.
It was a oopsie.
Yeah. We scheduled it out too far.
Way too.
636-394-5524. Well, you got extensions to keep working on.
Yeah, I got a couple weeks worth of stuff to keep me occupied.
So you're not going anywhere
Nope.
yet. We'll be back right after this.
Keep What's Yours continues with Josh Gilbert and Jeff Zufall.
Back on the Big 550. Keep What's Yours. Jeff Zufall. I'm keeping more of what's mine. Here, my wife texted me. Did we get our tax return back? No, it generally gets deposited on Friday. Okay. All right. Well, still waiting. Still waiting. But not too worried. Last year, we got it back in 3 days.
That's
Once
right.
Jeff filed 3 days, and I got my tax return. But Jeff's saying it's taking a little bit longer.
It's taking a little longer because it was later in the year when we filed.
Yeah.
Where last year we were kind of early, if you want to call it that. So.
Yeah, got it done early. They didn't have as much to do over there at the IRS. Patience is a virtue.
That's right.
Just knowing, though, that it's not going to be months.
No.
So my mom went to Jeff. Full disclosure, Heidi went to Jeff Zufall. She got money back, and she paid less than what she pays every year. My mom used Jeff Zufall this year just because we were going. Our taxes are kind of tied in with one another because we've got a LLC together. Mm-hmm. And she said that she didn't get her tax return until December from last year. Filed her taxes in April. She used somebody else. Mm-hmm. Filed in April, and she was like, I didn't even get it until just a couple months ago in December. And I was like, well, somebody did something.
They filed an extension and just sat on it.
Yeah, sat on it, filed an extension.
October. Yep.
Or maybe there was an error in putting it in, and it got spit out the side.
Yeah.
And Jeff says that when something gets spit out the side of the computer, they got to come over and take a look at it and say, oh, this was a 1 and should have been a 2.
Or they're doing it for identity, which, and again, at the end of the day, you go, okay, that's great, but you hung up my refund. They'll do this identity check. So we're starting to see a lot of that where they're like, hey, we got your return, but you need to prove who you are. And it's random. I don't know if it's like luck of the draw. It's not an audit.
Do they do that even if I use my tax PIN?
Yes.
Okay.
And it's random, and it's both ends of the spectrum, high income earners, low income earners. And the theory is it sends you like a 6-page letter, and you read it thinking, good gosh, what's going on? And all it says is, hey, send us a copy, fax to this number, and they'll give you a number, fax a copy of your W-2 and maybe the face of your 1040. All you got to do is fax it in. Basically, within a couple of days, it proves that you have the same data that was turned in, and they'll release it.
Yeah.
So it's kind of weird, but we're seeing a lot of that. So and
it is the IRS, so they are still using fax machines.
Yeah, they still use fax machines. We have a fax machine, but I don't think anybody has sent a fax in a long time.
Well, speaking of which, McGraw was talking about it last week. Hey, Kelly Jackson, I didn't see the news down at the post office this year, at midnight.
Nobody goes there.
Heaven forbid somebody do their taxes by hand and mail it out.
I don't think that they will accept a handwritten tax return anymore. I think it has to be computerized or done by computer. I mean, you can get the forms, you can pull them online, you can handwrite your stuff in there. I don't think that they will accept a handwritten tax return.
Interesting.
And literally 3 this year that people had done previous year handwritten tax returns. That I saw their 21 return, and it was handwritten. I was like, wow, that's pretty bold.
Yeah, that's bold.
It's very bold, and you got to be careful because one schedule, how do I want to say it? One schedule may jump, it'll leapfrog, it'll take a number from a schedule and push it to another schedule. And if you don't catch it, then you're off.
Yeah.
So that's why in the old days, that's why they had 80 billion people working at the IRS, because it came in handwritten. They had to go literally line by line checking it. Yeah. Today,
can somebody tell me if this is a 6 or a 5?
Exactly. If you've got bad handwriting, then you're in for a world of hurt.
And
so
shoot, here at the station, winners call in and they, oh yeah, here's the winner's name and phone number. Yeah. And I'm like, what the heck? What is this a real email address? Yeah. I can't even read this. So gosh, I can't even believe it. Back in the day, the news was probably camped out front.
It was camped out front. As people came through, they had letter carriers out there, collecting their envelopes, and they were all postmarked by midnight and blah, blah, blah. Very
Tax day 2023, I'm live in front of the post office, and there ain't nobody here.
You and the raccoon running around. That was about it.
Me and the raccoon. So everything should be filed online. It just makes it that much speedier. Yeah. What should we shred? Shred day. I got my email from Capital Advisory Group. That's where Jeff works, senior tax strategist and wealth advisor. Capital Advisory Group, 636-394-5524. My wife asks me, hey, the next time we have a bonfire out back, I got a bunch of papers I need to throw in there.
Yes.
And the last time we did that, a bunch of these,
embers
go flying everywhere. It doesn't burn like wood does. It doesn't burn even like newspaper does. It burns and then just goes up in the air. Yeah. And a lot of these are still on fire. And the last thing I want is them to float over my fence.
Yeah, and get your neighbor.
Burn my neighbor's arborvitae down.
That's right. Oops.
So I'm like, no, but Jeff just sent an email from his office about Shred Day.
Yes. So every year, this is the 11th annual shredding event. So for the last 11 years, or 10 years technically, we've had Shred It come. They basically come on the lot. They bring a truck. You could roll right in. We'll empty your car for you, truck, whatever. They shred it.
This is a heavy-duty shredder.
This is the real deal. I mean, they put it, the thing's roaring away the whole time, so afterwards you got a headache.
Yeah.
But originally this started because for us, for tax season, there's a lot of oopsies. And again, there is no such thing as a paperless tax office. I don't think that exists. But we have a lot of where we key a return. Like I said, somebody may key it for me. They put it in front of me. I go through it and look at it. I look at a printed return and go, ooh, there's an error here. You have to reprint the whole thing. So the whole thing gets chucked in the recycle bin to be shredded. And by the time tax season's over, we probably have 40 or 50 paper boxes filled with stuff that needs to be shredded.
Stuff that needs to be.
So we used to just have them come after tax season and we toss it in there. It's all great. Now we have clients come, bring whatever you want to bring, that needs to be shredded. We have people that bring us just a little, plastic bag of stuff to be shredded out to truckloads. You can't fill this thing up.
Wow.
But the key to it is I average person, 3 years is what the IRS can look back on, okay? Unless they deem fraud. If they deem fraud, it's unlimited. And when I say fraud, not that, you missed a $100 dividend distribution if you omitted greater than 25% of your income, which you would,
typically if that happens.
Yeah, if you made $20,000 extra throughout the year, you'd go, oh yeah, I made that $20,000. Where is it? So
you probably did that on purpose.
Yes. So that it's unlimited. They can go on and on and on and on. And that's, you have no say in it. But typically it's 3 years is a statute of limitation. So if the IRS has not petitioned 3 years worth of your tax returns, you're perfectly fine. So we say keep 4 years. We keep 4 years of your personal returns. Now, if you're a business owner, never, ever, 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 and I repeat this, never, ever, ever, ever throw anything away.
Wow.
If you pay tax as a business owner, never, 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 never throw anything away. And the reason being is the IRS can come back and say, hey, you pay payroll tax 5 years ago, 7 years ago, you better do proof that you paid it.
Show us.
So that's why we say my basement of my house has 20 years worth of stuff in paper boxes, labeled by year on a shelf in the basement, just safekeeping just in case. I could probably never read it or remember what we did.
It's not our stuff. It's
our personal
Capital Advisory
stuff.
Over years and years.
Over years of sitting down there. So as a business owner, every time that you pay a tax, keep a receipt. Now, the last, I'll say 4 years, 5 years, probably a lot of digital stuff. So there's I'm not taking home the stuff I used to. Just because you can digitize it, put it on a zip drive, a terabyte, whatever the case may be, and you have that backed up. Mm-hmm. So, but if you own a business and you pay payroll tax, you pay, estimated tax, keep receipts of everything. So, unfortunately, if you own a business, you could chuck your personal stuff, keep the business stuff. But 4 years is the average. Old bank statements, if you don't need them, if they're online. Anything that has your Social Security number, basically more than your name and address on it.
Shred it.
Shred it. Don't throw it away. I see people where they rip stuff up and throw it in a trash can. I'm like, you realize what you just did?
Yeah.
Shred it. So, and I think last year we saved, if I remember correctly, I think they said that it was 102 trees. I think they do like a comparison. At the end, they send us a little thing at the end on the weight of the shredding. I think they said it was 100. I think last year was 102 trees. So,
I'd be coming out just to get the stuff out of my filing cabinet.
Yes.
And dispose of it responsibly.
Yeah.
But it's nice to know that at the end of the day we saved a tree as well.
That's right. That's right.
How about that? And then you told me this one off the air right before we came back on in commercial break. Here's an example. Wife uses her Social Security number
Yes.
to file jointly. They say, what's your social? And the wife is doing it. She says, well, my social is
Exactly.
XYZ. You told me that for whatever reason, whether the IRS is sexist or it's just how they've always done it, whatever reason, if you're married filing jointly, the husband, the male,
Yes.
always goes first.
Hypothetically, whoever is listed, without sounding chauvinistic, who's ever listed first on that return is the Social Security number that you use. And the problem is we've had a ton where, married filing jointly, and again, not to be sexist, but the male's always first, other than had a handful this year where the wife was first, so it's kind of cool. But they owe a tax. The wife goes online, she pays the bills, she clicks on the thing, it says what's your Social Security number, she puts her Social Security number in, pays the bill, boom, done. Everybody thinks everything's great. 30 days later, you get a notice from the IRS saying, hey, you haven't paid your tax bill yet. And it's like, wait, you already took it out of my bank account. You physically have to call the IRS. For whatever reason, their system will not pick up when you make that payment. It can't pick up those differences.
And I married filing jointly filed.
You would think that it would pick up any Social Security number and correlate it back, but it doesn't. So that's the most common letter that we get after tax season saying, you didn't pay your tax. And they're like, wait, I paid it.
But they've got my money. Oh, cool, free money.
So the easiest fix is you can write a letter. But I strongly suggest they are answering the phone currently. Wait times are way down, but you're still going to wait. But you have to call and physically say, hey, it was paid under this Social Security number. Correlate it back to this one. And they go, okay, taken care of. Boom, you're done.
Yeah.
So stupid. But if you do get a notice, here probably in the next, I'll say 2 months, the letters will start popping out. Do not panic. And again, if you get a letter for, hey, you owe us $45. Okay, pay it.
Yeah.
Just, it's not worth your aggravation. Pay it to get them off your case. But let's say that you get a letter and it says you owe us $5,000, and you're like, wait, what's going on here? In some cases, you pay that under protest, and you literally put on your check, paid under protest, and send it in. And you notify the IRS or the state agencies that it's paid under protest, and then work backwards to actually weed out whatever you got to weed out. That way, it's paid. They can't send you any more nasty letters. They can't, threaten to levy you and lien you and all that stuff. But it's just a way to kind of work through that as you go.
Yeah, and that's one of many things to keep in mind as you're getting ready to finish out the rest of the year and do taxes. Hey, guess what? We should already start thinking tax 2024.
23 season, 23 year, 24 seasons. So.
Never too late because there's still 8 months of
there is a ton.
Every time you get paid, that's a tax event. There's 8 months of tax events.
Yeah.
How can we keep more of my money on my paycheck every 2 weeks? Jeff can set you up with that. If you paid a bunch of money this year and you say, you know what, next year I'm gonna fix it next year. Right now
Let's
is
start
next
fixing
year.
it. Yeah, because
now,
even if we adjust your what's called the W-4, where that's the withholding, for your payroll. If we did it now, here's the trick: is if you adjusted it, it's going to be adjusted for 8 months. Then we got to come back in January and adjust it for 12 months the next year.
Right.
So there's a 2-step process in that. It seems like it's a pain, but believe me, it's worth it.
You want to save more money on next year's taxes? You have to start today.
Exactly.
636-394-5524. Jeff Zufall, Senior Tax Strategist and Wealth Advisor with Capital Advisory Group. CapitalAdvisoryGrp.com. And Shred Day is on April 29th out in Ellisville. Do you know the times?
I think it is 10 o'clock to 12:30.
10 to 12:30. Go out, bring your stuff, have it get shredded, and talk to Jeff and say, look, I listened to you on the radio. I heard Heidi saved money. Josh and his mom saved money.
Yes.
Everybody's saving money, and their tax bill is lower, and they're paying – I'm paying Jeff less than I paid the last guy to do my taxes.
That's right.
So get Jeff to start working on your stuff as well. Thank you so much, Jeff.
Thank you.
Congratulations on another tax
That's
year
right.
in the books. And we'll see you next week.
You betcha. Thank you.
You've been listening to Keep What's Yours with Josh Gilbert and Jeff Zufall, Senior Tax Strategist and Wealth Manager at Capital Advisory Group. To learn more, call 636-394-5524 or visit CapitalAdvisoryGrp.com.